Hi, it's Ted Lee again, and we're in the Realtor Information Center. On this video, I want to focus on the two types of short sales and the 4 easy steps for realtors to collect their full commissions when they're working with us. So we have non-HOFA and HOFA short sales. And HOFA is a government scheme comprised of non-negotiable rules, requirements, timelines, and monetary incentives. And it's limited to borrowers with a documented financial hardship, where the borrower represents that they have insufficient income to pay their mortgage. In contrast, non-HOFA is really a justification or a negotiation, in our case, a process of problem solving with the purpose of convincing the primary and junior lien holders to release their liens and discount the net payoffs to enable a property with negative equity to be sold to a third party. And non-HOFA short sales are an excellent option for the broadest range of sellers. All right, let's look at the necessary conditions for consideration of the two programs. With HOFA, eligibility is limited by a rigid set of rules depending on the specific HOFA program. And there's basically 5 or 6 versions of HOFA. The main program is administered by Fannie Mae, but Fannie Mae has some of its own rules that are a little different from the original HOFA guideline. VA has slightly a different set of HOFA requirements, FHA, and so on. Now, with non-HOFA, eligibility is not limited to the amount the borrower owes lenders, the borrower's income or assets, or the type of property, or even the nature of the hardship. So now let's look at how these two programs get started. With non-HOFA, the process starts with the submission of a complete short sale package and with a signed purchase and sale agreement and a signed non-HOFA form. So basically, non-HOFA starts with a buyer for the property. With HOFA, the borrower is first directed to the HAMP loan modification program. And before that borrower can be considered for HOFA or a HOFA short sale, the borrower has to basically be determined to be ineligible for a loan modification or fail a trial loan modification or default on a trial loan modification. And then at the discretion of the investor that's holding the note, the servicer has 14 days to solicit a borrower for a HOFA short sale. All right, let's look at the necessary conditions to close the two different programs. With non-HOFA, closing is subject to the stipulations and conditions of the negotiated approval letter and the final HUD-1 settlement statement. With HOFA, the servicer and the borrower must first execute a short sale agreement. And again, that doesn't even get started until the borrower has gone through that sort of gauntlet of the trial loan modification program, and then the borrower has to be solicited during that 14-day period, and then the servicer has up to 45 days to prepare a short sale agreement. They can actually submit a notice for extensions to complete the agreement. And then after the agreement is sent to the borrower has 14 days to execute it. So just kind of adding up all these periods, with HOFA, the property is not listed to try to find a buyer until anywhere from 4 to 6 months after a homeowner has indicated their interest to do a HOFA short sale. Now, the property, pursuant to the provisions of the short sale agreement, the property is listed for a minimum of 120 days at the 90-day BPO value, essentially at a retail price. Now, the conditions for close are that in addition to receiving a signed purchase contract, the mortgage insurer must waive any right to collect any additional sums from the borrower, meaning they can't ask the borrower to sign a promissory note. And the second and subordinate lien holders and junior lenders must agree to release their liens and provide a full release of the borrower's liability in consideration for a total of $6,000 that's used to pay off all the liens in priority of seniority. And this payment cannot be used to satisfy mechanics liens and certain tax bills or liens associated with HOAs or even legal bills. Now, the servicers can require the borrowers to pay all or a portion of their mortgage payment during the trial loan program, and the HOFA short sale process up to a maximum of 31% of the borrower's monthly gross income. Finally, the buyer who submits the contract must also agree to not resell the property for 90 days. Now, typically that's not a problem if the buyer is an owner-occupant, or let's call him a retail buyer. But if the property needs repairs of 3% or more, meaning that the property may not be eligible for bank financing, then this restriction can severely restrict the pool of buyers for HOFA short sales. All right, let's take a look at how we close nearly 100% of all the short sales that we start. Our negotiated short sale price is typically 10 to 20% below the as-is value of the property. And as a consequence, nearly 100% of our negotiated short sales close either because the negotiated price is acceptable to our investment company, the initial buyer, or we're able to arrange quickly for our contract buyer to purchase at our lender-approved short sale price. Now let's take a look at HOFA and sort of why it takes so long. HOFA goes out as a pursuant to the short sale agreement with a list price at the 90-day BPO estimate. Now, if the market is flat or declining, or that estimate is too high, this list price will not attract a buyer during the first 120-day listing period, and the servicer is under no obligation to reduce the SSA list price, even if it can't get sold in the first 120 days. So if it's extended for 30 days or another 120 days, still may not attract a price, or it may just drag on and take a while before a buyer finally surfaces. So viewed this way, the HOFA short sale process is actually an experiment conducted on behalf of the banks and the investors who hold the notes to determine if short sale properties will attract retail buyers, as if the sale was not contingent upon settlement of all junior liens and satisfaction of all conditions of the short sale agreement. The numbers tell the story. In 2001, according to the U.S. Treasury, 26,901 HOFA short sales closed, representing about 7% of all short sales closed in that year. We actually estimate that about 50,000 HOFA short sales will close this year, representing about 10% of all the short sales. Now, according to the U.S. Treasury, 62% of the HOFA short sales closed after the short sale agreement was signed. We estimate that the total number of borrowers that actually wanted to complete a HOFA short sale by initiating a trial loan program, possibly that percentage is closer to 40 or 50%, meaning that not everybody that starts a trial loan modification will ever make it to an executed short sale agreement. The average time to close a HOFA short sale is around 7 to 9 months. And you look at our situation, we close 96% or more. In fact, we've closed 100% of all our short sales in the last 6 months. and we're able to close our short sales in 70 to 120 days. Typically, the 70-day period, or 70 to 90 days, is when we're closing for cash, and if we have to arrange for one of our contract buyers to buy, it might take just a little bit longer, but it's typically in that range. On average, we're going to close short sales more often and typically anywhere from 2, 3, or 4 months sooner than a HOFA short sale would ever close. All right, let's look at the 4 easy steps for realtors that work with us have to complete to collect full commission. We provide the realtor with a copy of our non-agency independent contractor brokerage agreement, and the Virginia realtors and brokers will recognize the provisions of this agreement as it's in full compliance with the Virginia Code, and it's also in compliance with other state codes. Now, this agreement is signed by the realtor, the broker, and the homeowner and sent back to us, and it actually simply replaces the standard listing agreement. It's part of the package that we send in to the lender. The realtor will also give us a copy of the MRIS, or if it's another state, the MLS, and that's also included in the complete short sale package that we'll send to the lender. The realtor will run comps on the property, and after we complete the interior BPO with the lender, we'll notify the realtor and to withdraw the listing and relist for the authorized seller. And as I discussed earlier, we're either going to buy it quickly, or a buyer will be offered to us very quickly because of the advantages that we provide and our ability to offer it at our discounted, negotiated, approved price, so the closings can happen very quickly. Then we manage the entire closing process, and the realtor collects their full commission at closing. If you'd like to learn more about our success and what we do, just click on the tab that you're interested in on this website, and I'll meet you in that section to discuss the information provided there. But as soon as you're ready to get started with one of your short sale clients, or you'd like to speak with us, please click on the Contact Us tab, and we'll get back to you within 24 hours.